Welcome to Cash Chats, the podcast from BeCleverWithYourCash.com that helps you make the most of your money. I'm Andy Webb, and in episode 427, it's another Your Money This Week, where I'll be looking back at the big money stories from the last 7 days. Amelia is away this time, but I'm joined by a guest, my friend Peter Komolafe from the channel Conversation of Money. He's been on the podcast before. He's got his own very successful YouTube channel as well, so it's great to have him join us. So we'll get into that in a second, but don't forget, at the end, I'll also be sharing the deals of the week. So here it is, episode 427 of Cash Chats. Peter, mate, it's so good to see you again. It's been a while since we've had a chat, but yeah, thank you so much for coming on to Cash Chats to break down these big money stories this week. How have you
Yeah,
been?
no
What's
worries.
been going on with yourself?
Lots been going on. Content as usual, as you probably know, content all the time. Lots of stuff going on with a potential move at the moment, so I'm in the middle of that. But other than that, I've been pretty much been paying attention to a lot of the news and the budget that's coming in a what? It's about just under 2 weeks' time.
Yeah,
Lots of
2 weeks now, yeah.
lots of interesting things. Yeah.
Yeah, I've noticed over on your YouTube channel, Conversation of Money, that you've become a bit of a commentator. You seem to be sort of getting out there with the reactions to all the announcements right now.
Yeah, I think it's one of those situations where because there is so much being rumored, it's like number one, perspective is really, really important, but also to kind of provide an angle or a perspective of, this is what it potentially means if these changes were to come in. There's lots of speculation. I've covered
Very
pretty
true.
much all of them, including some of the things that I hope don't come in. And it's been very, very interesting to gauge the public's reaction on a lot of this stuff. Suffice to say, there's a lot of disappointment and distrust still in in our politicians and the political system. Lots of questions to be asked. So I think these things are good for discourse and discussion.
Yeah, and it's certainly been, like I say, picking up a good number of views and stuff. So it obviously shows that people are keen to find out what happened. And we'll come back to that later on. We are going to talk about some budget speculation, probably specifically more around potentially the impact on pensions in a bit. But let's kick
Mhm.
off with the first story, which happened on Wednesday, which was the latest inflation figures. And they fell by more than expected.
Yeah, I mean, 1.7% is the lowest what in 3 years now. So
Yeah,
really, really good news from a high level feel good factor. I think we've been missing that for a very long time because it's been inflation is here. I remember it being 11.1% and people just thinking, oh my God, what do we do? How do we get to this level where we are right now? So 1.7 is a really, really good result. I'm really keen to see what the decision is going to be from the Bank of England when they meet in November now. Everything is leaning towards we should see some kind of reduction in the bank rate, but with things going on in the Middle East as well at the moment,
yeah.
I know that the Bank of England are paying attention to that. So it's going to be very, very interesting indeed to see what they do. Do they pause still, or do they press forward with maybe a 0.25% reduction again? It's going to be interesting.
Yeah, it is, isn't it? Because so they held fast at the last meeting, kept it at 5%, following the cut that happened, 6 weeks before that. And all the talk then was, well, they paused it then, but we'll probably see one, if not two cuts before the end of the year.
Hmm.
But now all the talk since this latest inflation figure being, say, that much lower than expected, that lowest in 3.5 years, is that it almost looks nailed on. And I know when we talk about base rates, you can never say nailed on because stuff always happens,
Hmm.
and it is like
Yeah.
3 weeks away, so lots could change in that time. But yeah, it does look like base rate cut to 4.75%, very likely to happen in November, and potentially another cut to 4.5% at the meeting in the middle of December. So that could have an impact, obviously, on savings rates. We're already seeing a lot of those falling. We have been seeing them all year, but even those easy access rates, the 5% ones almost all gone. They pretty much will be gone, I would imagine,
Yeah.
if we get one, definitely if we get two. Mortgages, though, that's another matter, isn't it?
It is, yeah. I mean, so for mortgages, it's going to be extremely welcome to see a 0.5% reduction because I think we
Yeah,
still have a huge number of people towards the back end of this year, right about now, that will be coming off very, very low fixed interest rates from
yeah,
when rates were at 1-2%. And these people are looking at rates going to be probably in the threes and the fours now, which is better than it was when we were originally talking about this because we were talking 5.5
yeah.
plus sometimes on some of these mortgages. So it's going to be good news for mortgage holders. And I think they're eager. I mean, all of my guys that I hear and get messages from, they are chomping at the bit for the bank rate to come down. So when they remortgage, they can actually get a better deal. And also, I think for first time buyers as well, just that ability to be able to get into a reasonably priced mortgage that doesn't stretch their affordability too much, I think is going to be really, really welcome. I just hope that with all of the external factors, we don't at some point see too much pressure where actually the Bank of England becomes uncertain about what they're doing. We need decisive decision at this point, I would say.
Yeah, and we've already seen just this week a few banks actually increasing their mortgage rates a little bit, and it just shows us there's no, you know, they don't sort of follow hand in hand. If savings
Yeah.
come down, then also mortgages come down. It's all based on predictions in the future, and it can get quite complicated. But yeah, you would hope a half percentage point decrease would give a bit more movement on that dial, if not straight away, a little bit further
Yeah.
down the line.
And I would say as well, just on that interest rate point here, is I've been speaking to a lot of people who are for some reason still on the standard variable rate. Like, please go speak to your lender. Like,
Yeah.
you shouldn't be on a standard variable rate because some of the standard variable rates are like 6, 7% now. I
Oh,
saw one. This is probably a while back. It was more close to kind of like heading towards that 8% mark. Like, you can get really good deals right now. So speak to your provider, speak to a mortgage advisor because. Please just don't sit on a standard variable rate thinking that we'll wait and see what happens. Things are
yeah.
already moving. So
Yeah, they are so much more expensive, as you say, and it's kind of evening out. Okay, maybe you'll miss out if rates do come down a lot in 6 months or a year, but you'd hopefully save more just in that short period. But yeah, absolutely right. Talking to a mortgage advisor, mortgage broker, give you a sense of what's available, what's good for you is a very good idea. Before we move on, I just want to quickly sort of touch as well on inflation, because when we shared the news story yesterday in our Facebook group, a lot of the comments of people going, "It doesn't feel like this. It doesn't feel like it's only
mm,
1.7%."
mm,
And looking at the figures, lots of things have fallen. If things are still increasing, that's what that 1.7% means. But interestingly, the big drop, the one that really I think has brought stuff down, to that lower than expected figure, was around petrol and flights and travel dropping down 10.4% year on year. So
mhm.
that's probably why people aren't notice it in the supermarket, which actually food and drink has actually gone up a little bit. It's a big basket. It's a combination of stuff, and prices are
Yeah.
still getting higher, just not like you said that crazy 11% which we had, 18 months or so ago.
Yeah, I think that's the distinction here is within the components that are used to measure inflation. I mean, we can look at these numbers all day long, and people do pour over the numbers all day long. But because we're now at 1.7%, doesn't mean that prices aren't increasing, and so it's prices certainly aren't going to return to where they were 2 or 3, 4 years ago. I always explain it's almost like this is a reset and a normalization of where prices are now, but they're still higher than what they were before. But the 1.7 number basically means things are still increasing, but not as much as they were before. And actually, we're lower than the rate at which things were growing before. And I think that's a really important thing for people to get their head around because, yeah, people were like, well, it doesn't feel like it. My bills are still much higher. And it's like, yeah, unfortunately, they are. And this is the new normalization that we need to kind of get used to.
Yeah, and in fact, the next inflation figures are likely to be going back up the other way, partly because, as we reported more recently, the energy bills went up by
Yeah.
around 10% just the start of this month. So that will be factored in. So things will start going back up the other way. But
Yeah.
don't worry, not hopefully not those sort of crazy figures that we were seeing not too long ago.
Yeah.
The next story is really interesting, and this is an investigation that the BBC documentary series Panorama did on Revolut, which
Mhm.
looks at fraud in bank accounts, specifically the number of well dodgy dodgy dealings that seem to happen when you've got a Revolut account with scammers.
Yeah, I read this and I was so my partner's got a Revolut account and she's in Dubai right now. And reading the story made me really, really worried. And I'm always going to say to her, like, listen, please just be careful of your Revolut account because it feels like they didn't have, number one, adequate checks and balances in place. But more importantly, and this is common with a lot of the new startup banks these days, someone to actually phone. And it drives me
Oh,
absolutely mad when you're looking for a number, you want to contact a company, and none of them have a place where you can easily find the telephone number in the case of emergency. It's a chat function within the app. It's like within a chat function in the app, oftentimes it's a bot anyway, initially before you get through to a person. And chatting in a chat function is not the same as explaining, speaking to someone. And I think that's probably one of the biggest kind of like failures that they've had in the fact that he couldn't just pick up the phone and say, please stop these transactions from going through my account. I've made a big mistake. I don't know how this has happened. Please help. And the fact that they're now saying, actually, we're not going to refund the money, that doesn't sit well with me. And I don't think that will sit well with a lot of people either.
No, I mean, I definitely recommend everyone to go to iPlayer and check out the whole documentary if you are interested in this, because they've actually got live recordings from the time the woman, one of the people who was scammed, her business line automatically records calls. So they've actually got the scammer taking her through step by step, and you see and hear this money coming out, thousands and thousands and thousands and thousands coming out of this business account, because this scammer is able to, manipulate the systems and manipulate the customer. Particularly, it seems that's more prevalent with Revolut. And in fact, what the investigation seemed to show was they know there are these vulnerabilities, or at least there were these vulnerabilities in Revolut, which is why they are targeting people with Revolut accounts. And some of the other, some really interesting data that came out of this investigation from different sources. So the action fraud reports for 2023, 2024, in terms of number of the banks, the number of complaints they had about fraud, there were 9,793 that involved Revolut, which was the highest of all the banks.
Yeah,
And it was 2,000 more than Barclays, which is the UK's biggest bank, which has a much, much, much larger customer base,
yeah,
and double that of Monzo, which has maybe a similar customer base.
yeah,
So automatically, more people complain about fraud with Revolut, which suggests that fraudsters are targeting people there. But
yeah,
also, the ombudsman had 3,500 complaints about about Revolut, which again was more than any other bank. And Revolut would not admit it was at fault for any of these. So there's a number of things going on here, aren't they? Which I say, you're talking worried about your partner. I've never been the biggest Revolut fan anyway, but I certainly would be cautious about having uh, large amounts of money kept in there. Forget the fact that it's at the moment only an e-money account rather than a fully regulated bank. Even when that comes along, this investigation would certainly say, think about moving your money, the bulk of your money elsewhere rather than using it day to day.
yeah. I mean, I think there were a couple of things that really kind of came to my mind here, and the first one was it stated that they're not a fully licensed bank. So,
Yeah,
is there some kind of, I guess, loophole in their requirements as a e-money holder or e-money provider? I can't remember the actual term that they use. And secondly, I don't see how they wouldn't have known about these vulnerabilities if it is now come to light that these scammers are targeting Revolut customers specifically. So, is there a breach in security somewhere that they may have been aware of or may not have been aware of that they haven't plugged in time? And how they can kind of just sit back and say, well, we're not responsible for any of this. We're not going to refund any of the money. I think that is problematic. And I think that's probably where maybe they'll have something to answer to the regulator for, because, you think about the responsibilities and what the banks, well, they're not a bank. And this is probably
yeah.
the loophole. The banks are required to do certain things in these kind of circumstances. So if they're devolved or removed from that responsibility, that is an issue. It's a big issue.
Yeah, they actually had on the investigation as well a couple of ex-Revolut senior employees who would speak, in anonymous sort of terms. So you could change their voice and stuff, talking about how actually the pressure within Revolut is all about growth and all
Mm,
about kind of making money at the expense of actually some of that due diligence and some of that kind of security measures in there. And of course, Revolut come back and say they've increased the number of staff they've got, but I'm not saying people can't
You're too
change. I'm
late,
not
though.
saying it, yeah,
Yeah.
the reputational damage is certainly very worrying right now for people. Again, in the future, if they can come around, they can prove they've made those changes, then it's a different matter. But yeah, something to be very aware of right now. And I mean, we've spoken before about this increase in terms of just scammers and phone thefts and all these kind of things, and how just Amelia did a good interview for that one, and how that made me think twice again about getting annoyed about the security measures on my phone, having to move money. I'm like, you know what? I'd rather have that than have potential
Absolutely.
vulnerabilities exploited.
Yeah, absolutely. I mean, I was thinking about getting a Revolut account for my travels in the new
Yeah.
year and just reading that, and I was like, I'll probably just find an alternative to it now, to be honest."
Yeah, that makes sense, I think. Right, let's talk about some budget speculation. And I know we talked earlier on, we said there is a lot of this. And I'm trying to think, well, there's always so much, it changes all the time. You never know what's going to come along.
Mm,
But something that does look increasingly likely the closer we get to the date is that one area where Chancellor Rachel Reeves might be able to generate some income is to increase national insurance contributions for employers. Obviously, they made a
mm,
big thing about not making any increases to VAT, income tax, or national insurance for working people. But, you know, bit of a workaround there to maybe add that on
yeah,
to the amount that employers pay every time we get our salary.
yeah.
What are your thoughts on this, and what impact could that actually have on us if it goes ahead?
I made a video on this, and I'm kind of in the camp where they kind of back themselves into a corner with national insurance and income tax because the two of them are the largest
Yeah,
proportion of the tax revenue. So increasing national insurance contributions on employers technically doesn't break their party manifesto. But I think for employers, I think the large caps will be fine. Large cap companies will be fine, but large cap companies are very, very few when you look at the number of companies in the UK. There are more small companies and medium companies, generally speaking. And those are the companies that are likely going to struggle with this. Now,
yeah,
granted, some of the small companies will have a £5,000 allowance, so on and so forth. But what this will do is it will do a couple of things. Either it means that at your next pay review, there may not be that much of a pay increase. So we're talking again in this realm of wage stagnation, with property prices still increasing for people who want to get on the property ladder. Or it may just mean that even if they do say, okay, look, let's try and pass this on, they have to recoup that cost in some way, shape, or form somewhere within the business. So either the employee pays for it or consumers pay for it by way of increase to the cost of their products and services. My big question is there's been a lot of political noise about growing the economy. So does this as a potential policy that comes in undermine this idea that you need to get economic growth? Because the biggest number of companies in the country that will be responsible for that economic growth will be small and medium-sized enterprises, and they are likely going to be the ones who are going to have to carry the bill for this, really. So I can see that is it completely necessary? I mean, there are so many other things that they could potentially do. Why have they chosen this one? I guess we're going to find out because at the moment it's all speculation. We don't know whether it's going to come in or not. But I think it's definitely a loophole around the party manifesto, but one that I almost couldn't discount them doing because how can you not increase national insurance contributions?
yeah. It doesn't feel that there's too many ways you can do that to generate income. Obviously, there's still that speculation around inheritance tax, around potentially a single rate of tax relief when it comes to pensions, capital gains tax changes as well potentially. But yeah, they need to generate a lot of money, and there's not many options. So yeah, interesting to see if we do get this one on the 30th of October, so only a couple of weeks away. What are your thoughts on some of the other sort of pension speculation? Obviously, you cover pensions a lot more than I do.
Yeah.
Things like potentially lowering the cap, the tax free, the cap on the tax free sum, or that single tax relief. Do you think these are things that will have too much of an impact on the majority of us?
Well, interestingly, reducing the cap on things like the tax-free cash, these are easily implementable plans. So they could do that relatively quick to start generating money relatively quick, which is probably why it's on the agenda. I'm a big pensions guy. So I know that, and you'll know this, we're not saving anywhere near as much into pensions as we should be as a nation. And we know that the state pension is becoming more and more unaffordable, which is why the state pension age keeps getting pushed back. Now, I can see the reason why they want to do this to increase revenues in the short term, but I'm
Yeah,
more concerned about what that means for the long term impact on people actually putting money into a pension. It is a huge planning benefit when you say, look, you can take 25% of the amount you've amassed in your pension completely tax free when you hit 55 currently under the current legislation. That makes a huge difference to a lot of people. So to reduce the cap from 268,000 to where it is, where it is now to 100,000 is going to have a big impact on people who are planning for retirement, who are going to be depending on that money to be taken tax free as an income. And
yeah.
so I'm worried about whether or not it will disincentivize people in the long term, so younger generations, so on and so forth, to pay money into a pension. And I'm a little bit concerned about what impact it's going to have to people who are actually on the cold face of, I'm retiring, I need this money in income right now. But I can see the economic need for it because we need to generate more money in tax revenue.
Yeah, it'd be interesting that one of this sort of very complicated if they can implement it, but this idea of a flat rate tax relief, reducing it. So rather than paying if you're a basic rate taxpayer, getting a 20% tax relief, or a high rate getting 40%, or additional get 45%, everyone had the same rate. Obviously, that would be potentially a disincentive for people who are earning more. But if you are younger, actually that could be a good incentive because the more you put in earlier, the higher that tax rate. So the more money, your free money, you're going to get from the government. So there's pros and cons on all of these, aren't there? I guess we just have
Yeah,
to wait and see what's announced.
100%. I mean, that one I'm kind of I'm happy with because I'm like, okay, look, if you're 45% taxpayer, you're probably in that position where you can over the course of time get a really decent pension pot. It's not going to be the end of the world. For people who are 20%, you know, taxpayers, that's a
Yeah,
huge boost. That is an incentive. So I think that would work really, really well because yes, you're disincentivizing the top end of the ladder, but really those people who need it are the people at the bottom end.
yeah. So we've been quite heavy with the stories so far, quite quite heavy
Mhm.
economic ones. But this last one this week is an interesting one that's kind of went viral on social media, and the Guardian picked it up as well around trains and rail cards. And this was about a young guy who was sent basically he was going to face prosecution by Northern Rail for a £1.90 underpayment on a rail fare um, because he had accidentally um, gone against the terms of his rail card. I mean, it's bonkers, and they've picked up some other reports of people for similar amounts of accidental infractions of these rules, fines of like more than 450 quid for such a tiny,
Yeah.
tiny, tiny thing.
Yeah.
What's the deal here?
Look, what they're saying is that it's within the terms and conditions, but I don't know about you, but have you ever read the terms and conditions on a rail card?
Well,
I've
this is me we're
never
talking
have.
about. So.
Well, actually, you probably have. I haven't. So I think it's an easy mistake to make, right? And I think are there people that would maybe take advantage of it? Yet, possibly. But I still think that if you're kind of like caught, you should be given the opportunity. It's £1.90. Like pay the £1.90. Why would you go
Mhm.
after someone and give them a fine of 400 odd quid? Why would you do that? I, part of me feels like, okay, is this kind of like an opportunity to just grab some additional money from people? I mean, the length
Yeah.
of time you have to go through, the process you have to go through, just give the opportunity to pay it's £1.90. Like we're not that broke, we're not to the point where you have to make, profits that large that you have to go after someone for £1.90. I mean, it's just crazy.
Yeah, it's like when you see a traffic warden and they see you running towards the car and you've got like 1 minute and they're waiting to slap the thing on because
Yeah.
they don't care. It's just about trying to generate that income. And in fact, Northern have backtracked on this because they actually have a rule which their conductors weren't following that says that you have to give them the chance if someone has underpaid, give them the chance to pay that there and then rather than being quite officious with it and saying no, that's an invalid ticket, and we're going to send you this penalty notice. For those of you who don't know, it's worth as Peter said, they're really important. Do check the terms and conditions for anything, not just rail cards. Make sure you fully understand how you're using something. But the rule on most of them is you can't use them before 10 a.m. Monday to Friday, or at least with the younger person, so the 16 to 25 and the 26 to 30 ones, there's a minimum fare of £12 before 10 a.m. So just do double check when you're using these that you know exactly when you can and can't use it. It gets even more complicated by the fact that that rule for those two cards doesn't apply in July and August when people aren't at university
Mhm.
and things like that. So this is why that guy in particular got mixed up because he'd bought tickets before 10 a.m. and used it and been absolutely fine. But yeah, I think if you do have a rail card, just double check that when you are using it, you are using it in a way that isn't going to end up with potentially, hopefully not, prosecution and legal action to try and get this, but at least not, at the very best, you'll get the ticket you should be getting on that. Saying that, I think if you are eligible to get a rail card, they are well worth getting hold of. A third off travel when you're able to use them within those times. Potentially one long journey, you're getting that money back, such as the expense of train tickets right now. So do look into that. And there are from time to time ways to save money on these. So you can normally get a tenner off most rail cards, which brings them down from 30 quid to 20 quid. So that's an even better investment for you. Peter, thank you so much for joining me again. For those of you who don't know you, what are we mentioned the YouTube channel earlier, but there's a number of ways people can find you and follow you. What are the best ways for them?
Yeah, YouTube is probably the best. Conversation of Money, and on Instagram, Conversation of Money. I post regularly across those two things. So yeah, you can find me there.
Fantastic, Pete. Well, we're going to actually meet up next week, so it'd be lovely to see
Yes,
you in
we are.
person and properly find out what's been going on. So I'll see you
Cheers,
then.
Andy. Thanks, mate.
Cheers, mate. Right, let's end this episode with the deals of the week. As ever, you can find information about all of these over at becleverwithyourcash.com. The same goes for any of the stories that Peter and I just spoke about right now. In the show notes for this episode, you'll find the articles that we discuss, so you can click through and read about them in more detail if you wish. Very quickly, before we do the deals though, I'll share you a little bit about my money this week. Normally, Amelia and I have a little chat about this, but I'll share a couple of things that have happened to me. Small things, but things for you to keep an eye out for as well. So where I live, they had a local restaurant week going on with a number of sort of set meals and special offers to get you to go out and eat at local restaurants, which is great. But one of the ones taking part was a bit of a mini chain. It was the Ivy. I'm sure most of you guys know the Ivy. And I just want to share this one because it was quite interesting. They had an offer, 2 courses for 20 quid, which sounded reasonable if you wanted to go to the Ivy, right? But on the Ivy's own website, the exact same menu was available with 2 courses for £19 and 17 pence. I mean, it's a ridiculous thing they do this, but I just wanted to point it out to you guys because don't just trust. It's a good example of not trusting that a special offer is always a special offer. I know we're only talking about, nearly 90p, but sometimes just do that little bit of working around, read the other deals, just check you can't save money elsewhere. And the other one, we've spoken about theatre tickets before on the pod and ways you can save money there. But I was booking tickets this week for myself and my friends to go and see Dr. Strangelove in the West End. It's based on one of my favourite movies from the 60s, directed by Stanley Kubrick, and Steve Coogan is starring in it. So really, really keen to do it. It's not cheap, but West End theatre often isn't cheap right now. But interestingly, I found that going directly to the website of the theatre itself, the tickets were about £10 or £11 cheaper, the exact same tickets than if I'd gone via C Tickets or Ticketmaster or Today Tix or any of those other third-party ones. So again, same story here. Don't just assume the one price you see is what you should pay. Very, very quick shopping around will hopefully find you a better and lower price. Incidentally, with that one also, I bought some theatre tokens via one of those cashback apps we've spoken about, which got me another 4 or 5% off the price as well. Right, into those deals. Quick ones for you this week. So if you have O2 Priority, which you get with an O2 contract or with Virgin Media, or there is a hack that we've covered before, there is an article over on the website about this where you can get access to this for just £10. So it's worth looking at that if you want to get all these freebies. But so if you do have it, O2 Priority, you can currently get free tickets to an RHS Garden in October. So if that's your bag, that's a really good way to save some cash. Asda mentioned these Christmas saver schemes in the past. Asda has got an extra one running right now for most people with their Asda Rewards app. So log into your account. It can vary. For me, it was spend £40 in one go, get a £5 bonus to spend in December. Other people have maybe got make 2 transactions, adding up to 40 quid. Have a look. It's well worth getting that if you shop at Asda to get that free £5. Beavertown Craft Beer, there is an offer right now to get you buy one, get one free on a pint in pubs. It seems to mainly be in London, but there are lots and lots of pubs in London taking part. And as I said, with all the others, we've got the links over on the website so you can find exactly which ones are taking part. There is the return. We get this every 3 or 4 weeks or so, but there are good ways to stock up at the supermarket for 25% off when you buy 6 bottles of wine or more. As the Tesco, Sainsbury's, and Ocado are all doing it. What I would say with this one, if you can, try and stack the deal. So look for bottles of wine which are on offer and reduced, and then you get the 25% off again. So you get an even bigger reduction. Cinema deals. Tesco is currently selling gift cards for View, Cineworld, and Odeon for 15% off. What's quite good about buying these gift cards is you can stack them as well with other promotions, such as buying the ticket for Meerkat Movies, where you get 2 for 1 tickets, or the likes of Amazon or Octopus, where they give you 2 tickets for £10, where you can pay with the gift card, bringing that price down by 15%. So it's worth having a look at that. And finally, if you have a Bill's near you, it's a mini restaurant chain around the country. On Friday, they are giving unlimited bottomless pancakes all day for just £5. So there's a nice cheap meal to fill yourself up if you want to take advantage of that. There you go. Remember, becleverwithyourcash.com is where you find more information about all those deals and everything else we've spoken about. I'll be back with another episode on Tuesday. Until then, cheers.